Hey everyone, welcome to the Boutique Workshop Podcast. I'm your host, Ciara. And as always, it's my privilege to join you wherever you're at today. Just hang out with you and let's talk boutique business a little bit. So we have been working through a 4-part series on creating a recession response plan, planning your business. And we're on part 4 today. So we made our way through 3 parts. Number 1, debt management. Number 2, cash flow. Last time we talked about strategic planning. This week, we're going to wrap it up with accounting. So how do you wrap accounting into a recession plan for your business? So let's just dive right in. It's going to be simple, going to be easy. Okay. Number 1, start to think about your inventory turn. What does this mean? And why do I need to calculate something else? Well, I'll tell you or remind you that your inventory, it's what? If you guys were here in a room with me, I think a lot of you would shout it out. Cash on hangers, cash in boxes. You really need to think about your inventory as dollar bills. It really is. So you jump online, you go to market, you pay, someone gives you something. You pay $10, they give you a shirt to sell. You pay $5, they give you a necklace to sell. You pay $35, you give them a 20, a 10, and a 5. And in exchange, they give you a pair of jeans and you mark it up and you hope to sell it. You need to start thinking about each piece of inventory that you own as cash. It's money. Now, the exciting thing about that is if you learn to manage your inventory well, your inventory is what makes you more money. Your inventory is what gets you out of debt. Your inventory is your cash in when it sells, but your inventory is also your cash out when you buy it. So as we talked about cash flow, cash in, cash out, your inventory is a big part of that piece of the pie, right? Your inventory is a big piece of the puzzle. And so learning how quickly your inventory turns is going to help you understand what to buy and when to buy it. So you can look at your inventory turn by category, which is how I would recommend you start. In fact, if you've never looked at turn before, just look at your inventory as a whole. What did you start with 6 months ago? What do you have today? And what was the cost of goods? That's the basic formula. You use that formula and you can see what your inventory turn was. And then as you figure out your inventory turn as a whole, how many times did your inventory turn in the last 6 months or the last year? You can start to look at your inventory turn by category. So within that inventory, how quickly did my tops turn? How quickly did my picture frames turn? How quickly did my handbags turn? How quickly did my soap turn, right? Whatever main category you have in your business, whatever type of business. Now, it's not just apparel. If you sell products, if you exchange things for dollar bills, I like to say, then you have inventory. So taking a look at how fast your inventory turns. If you're a wholesaler, if you're a maker, you have inventory. You need to look at how quickly it turns. Start to look at that inventory turn. That is your number 1 point to recession response plan out your business. Have a recession response plan, which means you're looking at how quickly your inventory is turning. And if you have inventory categories that are turning so slow, you need to reevaluate if you should be spending money on those categories, right? If you're spending $10 and it's taking you 8 months to turn that $10 into $10 again, or into $20 or into $30, that might mean, hey, you know what? I need to get rid of that category because over here, when I spend $10, it turns into 40 in 2 months. Right? That's where I want to be spending more money. Think about that for a minute. Let's say I gave you each 2 $10 bills. Okay. You put one of those $10 bills into category 1 in your store. You put the other $10 bill into an item for category 2 in your store. Let's say you marked both of those things $20 for easy numbers. Now I want you to have bigger margins than that, but we're going to say 50%. We're just going to use easy numbers. So 2 $10 bills, you buy 2 different items for 2 different categories, and you mark each of those things $20. Now, item number A, let's say it takes 12 months to turn. So it only turns 1 time in a year. That $10 I gave you turned into $20, but it took 12 months to do it. Now, item number B turned really quickly. Let's say that item turned in 2 months, which means it would turn 6 times a year. So that $10 I gave you turned into 20, which you could then spend on 2 more $10 items, which each turned into 20, which now gives you 40. Now you can spend that on 4 more items, which each turned into 20, which gives you even more money. And that's happening every 2 months. Do you see what's happening here? That is why it's so important to understand the turn of your inventory. Because if certain product categories, vendors, suppliers are not turning quickly, you need to reevaluate through your accounting what that means for your business. Okay. Item number 2, I want you to start evaluating your financials. Now, we talked about this last time, having a regular time to look at your financials with a coach like myself, with, a bookkeeper, an accountant, a financial advisor, someone that can help you understand what your financials are saying on a regular basis. But today I'm telling you, just start by looking at them. Like, make sure that you have a bookkeeper that's accurately giving you monthly financials. And what do I mean by financials? I mean your profit and loss statement, your balance sheet, and maybe a cash flow if you want that. But at least a profit and loss. What did I spend? What did I make? A balance sheet. What do I have in debt? What do I have in assets? Take a look at that every single month. Start looking at your financials. And number 3, I want you to make sure that you're saving for taxes. Now, this is going to be part of the Profit First system that I teach for retail. I make it really simple. We have just several simple, not 7, several simple accounts that we set up Profit First for retail. As I teach it as a Profit First certified coach. And one of those accounts is for taxes. This is for on the profitability of your business, because remember, our ultimate goal is profitability and peace of mind. We want to make sure that you're getting as profitable and having as much peace in your business as we possibly can get, right? That's the goal of small business ownership. And so as you start to become more profitable, most likely you're going to owe taxes on that profitability. And so we want to make sure that you're saving for taxes. And we're going to do this through your Profit First account, your tax account that we set up for you. So 3 things again, when it comes to accounting: setting yourself up with a recession response plan for your business. And that is number 1, looking at your turn. What dollar bills are turning into more dollar bills quickly? Okay. That's just the simple way of saying it. What dollar bills are quickly turning into more dollar bills? What dollar bills are sitting and not turning into more dollar bills? Let's get rid of that kind of product, or let's thin it out. Number 2, looking at our financials, having a bookkeeper send us monthly financials that show us what we did in sales, what we spent, what we owe in debt, and what we have in assets or cash or inventory sitting. And number 3, that we're consistently shoveling a little bit of money away using Profit First to save for taxes. Okay. I love visiting with you guys. I just really enjoy it. I hope for you that you are feeling like you're moving forward in your business, that you're taking one step at a time, that you have someone that can simplify things down for you and help you understand what retail really looks like, how to build a strong retail business that can create more sales with less stress. I hope that you're in the boutique workshop or in the accelerator. Those are the 2 places you can hang out with me. The debt-free challenge happens monthly for now. That's another place that you can hang out and just get to coach with me a little bit, see what we're all about, and then move on over to the boutique workshop where we get you set up with the quick start money makeover. And then eventually move you over to the boutique accelerator mastermind, my mastermind program where we work on numbers as a peer group, where we benchmark results against one another, where you do monthly, not weekly, but monthly one-on-one coaching with me, and just weekly peer accountability. That's the setup that I have. That's the layout that I have for you as boutique retailers. And I want to encourage you to find yourself a place in one of those 3 areas. So either joining a challenge, being part of the membership, or moving into the accelerator mastermind. If you have questions on any of these things, please send me an email, hello@ciarastockeland.com. You can head on over to theboutiqueworkshop.com and find all of the good stuff. Follow me on social @cstockeland or @Join Boutique Workshop. Just reach out, send me a DM. Let's talk. Let's see where you would fit, how I can help you. I would love to work with you on your cash flow, your inventory management, strategic planning, accounting, debt management, any or all of the above. Let's make a plan. Let's have you stop floundering and feeling out of control, overwhelmed. Let's get you to a place where you love your business, where you understand what's going on in your business, where you make the plan to move your business forward and your business doesn't make the plan for you. Okay. That's what I have for you guys today. I will see you again next week. Bye for now.